What's going on, guys? Hope you're having an absolutely fantastic day. So today we want to talk about why the stock market and also crypto are crashing, right? So this is probably going to be a recap of the day, so you can really understand what happened, right? So early in the morning at 8:30 US time, we got a CPI print at 7.5% year over year. So basically, what this means is inflation is now running at a 40-year high, and this is way worse than analysts projected, right? Because analysts projected 7.2% with further increases in the future, right? So now they have to revise the projections upwards, right? So you can see upon hearing this, I don't know why this chart always changes back, but upon hearing this, the 10-year yield went from 1.928% to around 2%, right? And now it ended the day at 2.03%. So you can see what that did to the Nasdaq as well. It started the day off at 14,770. It hit an intraday high of plus 1.69%, and after that it just floated sideways for a while, and then it went on to get battered at the end of the day, right? So maybe a bit of like a false rally at the start of the day. Some people might say, "Oh, whales or something manipulating the market." It's entirely possible to create some liquidity, so they can dump their bags, right? So if we take a look at Bitcoin, we can see that Bitcoin actually dipped to 43,250 in the morning, and then it bounced back really hard, right? And people were thinking this was going to be a rally, right? Because look at that one candlestick. The rejection here was huge, right? So people thought it was going to rally on and on, maybe up here, right? But turns out it hit a resistance at 46k, and it got dumped all the way back down to 42.6 thousand, where it's finding some support and it's made another bounce here, right? So we'll see whether that can continue, right? So if you like this charts and you like this setup, this is basically FTX, right? And if you want to sign up to FTX, you can use my link in the description below, because you can get discount fees, right? Discount on the fees. Yeah. So what made the Nasdaq turn, right? Because you can see it was floating sideways, right? Nothing too aggressive, right? Maybe a point something percent loss for the day, but instead you ended up 2.33% down on the day, right? So actually, Fed member actually came out and said that I think it's warranted to have more rate hikes, right, during the next meeting, right? Fed James Bullard wants a supersized rate hike, and this is something that Jerome Powell said is possible, but they didn't confirm or deny it, right? So St. Louis President James Bullard said he supports raising interest rates by a full percentage point. That's crazy, right? By the start of July. So basically, in March they have to do at least a 0.5% raise, and they have to get 1% up by July, right? Which means at the end of the year they probably end up at maybe 2% or something like that, right? And the market's only projecting 1 to 1.25%, right? So I think that's on the very low end, because you can see inflation is running out of control, and basically if the Fed wants to remain and have their credibility, they're gonna have to do something sooner or later, right? Because in a few months time, maybe we're at 10% or something crazy like that, then we're basically going back to Volcker eras, right? And with the debt that the US has, I don't think they can do that Volcker trick and shoot interest rates up very high, right? Unless they find some way to fix the debt percentage somehow, right? Actually, they can restructure the debt into a 30-year bond, and then they push the rates up very high, right, to curb inflation, right? But I don't think they'll do that because it'll cause a recession and all the things like that. And I don't think this current administration has shown that they are willing to do that, right? So maybe they'll push rates up slowly, and it might not have as much impact as they want it to be, right? So what's a recap from here, and what's the what do I see down the road? So actually, I see a half basis, half percent rate hike in the March meeting, right? Because after this kind of results, I think the Fed really has to do something, right? But I think it's unlikely, but that's just my personal opinion, right? So on the one hand, I think they should do it, but on the other hand, I think it's unlikely, right? Because Jerome Powell has come out and said, "Oh, we want to guide markets as forward as we can," right? So basically, I tell you A, I'll do A. I'll tell you B, I do B, right? So they don't really want to surprise markets, right? Especially with the volatility that we're seeing in the markets right now, right? So as for my predictions, I think we're going to continue seeing more and more volatility as this rate hikes continue, right? So I want to point to you to this chart where a lot of people have said that when you have a rate hike cycle, right, the returns are actually good, right? So I think a lot of people are very mistaken because normally when you have a rate hike cycle, right, it's not out of necessity, but normally it's out of because the economy is strong, all the businesses are roaring, everything is hot, right? Because as you can see, we haven't had high inflation like this since I think 1982, right? So we are having inflation at a 40-year high, right? So we're actually forced to raise the rates, right? And if you can look at the real economy and all the things like that, it's not actually as strong as they push it out to be, right? Maybe because of political reasons or whatever it is to restore confidence. So they are saying that it's very good or what, right? But labor force participation rate is at an all-time low, right? So yeah, people will probably point to this chart and say that during rate hike cycles, you can see that from 1994 to 1995, S&P returned 13.8%. From 1997 to 1998, S&P returned 32%. But you get the point, right? They will say that during rate hike cycles, the S&P actually returns good returns, right? But I think they're missing the point where we are hiking out of necessity rather than when we have like the capacity to do so, right? Because normally what happens during a rate hike cycle is the economy is very, very strong, right? And that's the reason you can hike cycles without disrupting the markets, right? But right now we are seeing all-time volatility, weakness in the real economy, and when you want to raise interest rates during all this time, you can really expect that the markets will basically not do well, right? And one more statistic I'd like to point out, I don't have it open here, but every time we've hit, I think, above 5% inflation, we've had a recession, right? So if we see every time except for one time, so I don't know whether this time is the exception. It might well be, but it seems likely that we are headed into another recession, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, smash up the like button, hit subscribe, hit the bell button, and with that being said, have a fantastic day ahead and peace out.